In the booming world of sports, fortunes are being made left and right. But it's not always the players or the teams you see in the headlines. Today, we're going to go behind the scenes and look at the hidden engine that's powering this entire global industry. A company that honestly might just be the smartest bet of all. Let's get right into it. And when I say gold rush, I really, really mean it. Just take a look at these numbers. The global sports betting market is already a massive, nearly $95 billion industry just this year. But the real story here is the trajectory. It is projected to absolutely explode to $150 billion by 2028. That is a gigantic wave of money that's completely reshaping the world of sports. So, with all that cash flooding the market, you got to ask yourself, who's supplying the tools for this whole operation? Because, any smart prospector from back in the day knew the surest way to get rich wasn't always digging for gold yourself, it was selling the picks and shovels to everyone else. And that is exactly where a company like Sportradar comes into the picture. Now, they're not a betting company. They're not like a DraftKings or a FanDuel. Think of them more like the engine under the hood. They're the critical infrastructure that makes this entire ecosystem tick. So, let's break down what they actually do. At its heart, Sportradar is what's called a B2B, or business-to-business tech company. And they provide the raw materials. We're talking data, odds, software that are just absolutely mission-critical for the betting companies, for media outlets, and, get this, even for the sports leagues themselves. What's so fascinating is how they serve three completely different groups. For the betting companies, they're providing the live data feeds and the odds. For the sports leagues, they're actually helping collect all that data, and this is super important, they offer integrity services to watch out for any funny business, like cheating. And then for media companies, they supply all the stats and the broadcast tools that keep us fans glued to the screen. They are literally woven into every single part of the sports industry. And hey, if you want proof of just how essential they are, you don't need to look any further than this number right here. 127%. That is their net retention rate for their top 200 clients. So what does that mean? Well, it means that not only are their biggest clients sticking around, but on average, they're spending 27% more with them every single year. That's the textbook definition of a sticky business model. Once you're in their world, it is really, really hard to leave. Okay, so all that kind of sets the stage perfectly for the bull case, right? This is the optimistic argument for why this company's growth might just be, unstoppable. First off, the financials, they look pretty darn solid. You're seeing really strong revenue growth here, up over 26% in just 1 year. But what might be even more important is that their profitability is actually improving. Their adjusted EBITDA margins, which is basically a way to measure their core profit from operations, that's ticking up. So this isn't just growth for the sake of growth. They're actually becoming a more efficient and profitable company as they get bigger. Now this is where we see their real competitive advantage, what investors call a moat. Sportradar has managed to lock in these exclusive long-term data deals with some of the biggest names in sports. We're talking the NBA, MLB, the NHL. This is the official, highest quality data that everybody wants, and in a lot of cases, Sportradar is the only place you can get it. That is an incredibly powerful position to be in. And maybe the biggest tailwind of all, the United States. As more and more states legalize sports betting, the U.S. market is on track to more than double in just the next 4 years. And since Sportradar is the key data provider for the NBA, the NHL, and now MLB, they are perfectly positioned to ride this absolute tidal wave of growth. But, of course, it's not all sunshine and rainbows. Every investment comes with risks, and for Sportradar, some of them are pretty significant. So we have to look at the bear case, the reasons an investor might pump the brakes, and really acknowledge some of the dangers that might be lurking just beneath the surface. And here's the great paradox. This quote is from their own annual report, and it shows that their greatest strength could also be a huge weakness. Their entire business is literally built on these exclusive partnerships. So if they were to lose a key partner, or maybe the renewal cost just went through the roof, it could seriously hurt the business. The first major risk is all about the technology itself. Because their entire product is data and software, you could say they're walking a kind of technological tightrope. So they don't actually own all their own infrastructure. They rely heavily on cloud providers like Amazon Web Services and Microsoft. An outage at one of those places could literally cripple their services. They also have the constant challenge of updating older systems, and of course, they're always under the threat of a cybersecurity attack. Their business is only as strong as its tech foundation. All right, the second risk. This one comes from the outside. It's a super complex maze of global regulations. Sports betting laws can change on a dime, from one country to the next, sometimes even from state to state. There's always the threat of new taxes or much stricter rules. And here's the really tricky part. They can sometimes be held responsible if one of their clients isn't following the rules. So navigating this legal maze is a constant and very expensive challenge. But this third risk, this is arguably the most concerning one for any potential investor because it has to do with the company's own internal financial controls. Now listen to this. This is a direct quote from their own management in a recent filing. A material weakness in financial controls. In the investing world, that is a massive red flag. It basically means there's a reasonable chance that a major error in their financial reports won't get caught. And while they say they're working to fix it, this is something any serious investor has to take very, very seriously. So, to add another layer to this whole puzzle, the company is making a huge strategic move right now. They're acquiring a key competitor's assets, which honestly could completely reshape their position in the industry. Sportradar is in the process of acquiring the sports betting business from IMG ARENA. This is a really bold move. It's meant to consolidate the market, basically absorb a competitor, beef up their own products, and just further cement their spot at the top. It's a huge bet on their future dominance. So all of this brings us right back to that central conflict, that classic investor's dilemma. How do you weigh this incredible, massive opportunity against some very real and pretty significant risks? And at the end of the day, it really does all boil down to this. On one side, you have a clear market leader with an amazing competitive moat, a super sticky business model, and that huge tailwind from the US market. But on the other side, you've got serious regulatory headaches, critical dependencies on other tech companies, and that glaring material weakness in their own financial reporting. And that's really the ultimate question, isn't it? Is Sportradar the single smartest way to play this sports betting gold rush, the company selling the picks and shovels to everybody? Or are those red flags, the dependencies, the regulations, and especially that material weakness, are they a sign that the whole foundation could crack? That's the bet you have to decide if you're willing to make.